Now, for those of you who aren't familiar with Upstart Stock, the ticker symbol is UPST. And as you can see on the screen, the stock is sitting around $170 per share. But let's talk about the nitty and gritty. First of all, the market cap is $13 billion. And when you look at the PE ratio, it's sitting at 993. And that is mostly due to the fact that they're not netting a lot of the revenue that they are receiving, even though they are making lots and lots of money in revenue. But let's talk about the earnings, and then we'll talk about what their potential is in the long term. Obviously, we're long-term investors on the channel. We're not looking to make a quick buck, but when the quick buck does end up arriving, we'll take the profits. Obviously, this is not investment advice, but luckily, Upstart has been a great winner in my portfolio. And for those of you who frequent the channel, I hope it has been for you as well. So first of all, Upstart Holdings said revenue climbed 11-fold from a year ago to $194 million. 11-fold, okay? That's absolutely bonkers. The only company that climbed more than them is Coinbase in this same article, and they had a 12-fold increase in revenue from a year earlier. Now, here are some of the things from their financial highlights. Their total revenue was $194 million, like you saw before, an increase of 1,018% from the second quarter of 2020. The total fee revenue was $187 million, an increase of 1,308% year over year. Like I mentioned before, that is absolutely insane. And bank partners originated 286,000 loans, totaling $2.8 billion across all platforms in the second quarter, up 1,600% from the same quarter of the prior year. So what does this tell me? If you were thinking about this from a shorter to midterm perspective, you can see that their revenue is only going to increase over time. If they just barely originated more loans in this quarter than the revenue was for this quarter, meaning the money coming in the last 3 months, that you can already clearly see that this company is only going to beat revenue again. I mean, to originate 1,600% more loans, that is insane. Now, you might be thinking, what's next? Well, Upstart also increased its guidance, which has likely fueled today's move just as much as the second quarter numbers. The company now expects third quarter revenue of $205 million to $215 million, while analysts had been expecting about $162 million. For the full year, Upstart now expects about $750 million in revenue, a significant bump from the previous guidance of $600 million. Plus, Upstart's adjusted EBITDA margin is now forecast to be about 17% as opposed to the 10% the company had previously been guiding for. And if Upstart does reach that $700 million in revenue for year 2021, and you compare that to the previous year's revenue of $241 million, you can pretty much expect to see over 100, almost 200% change in the revenue year over year. That will be a big win. And so if their stock price does start to dwindle a little bit based off of, maybe analysts talking crap about the stock, or the media maybe spreading bearish news, well, when 2021 earnings do come out, their earnings will likely be very stellar, and we'll probably see a bump back up in their stock price. But when we're talking about Upstart stock, we're looking at a company of $13 billion, like I mentioned before. So if this stock is sitting at $13 billion, and their number one competitor in the lending space is Bank of America, that's sitting around $353 billion. Well, Upstart has a lot of room to grow if it starts to become the more dominant force in the lending space. Now, you might be thinking, well, not all of Bank of America's revenue comes from lending. Well, you're not wrong. And when you look at Bank of America's annual revenue, you can see that they bring in billions and billions of dollars, tens of billions to be exact. And last year, they brought about $74 billion in revenue, and about 37% of the total revenue and 36% of net income comes from the consumer banking side, which is mostly, you guessed it, fees and loans, which is pretty much Upstart's entire business model. If you're not familiar with the company, Upstart originates most of their loans using an AI algorithm versus the normal consumer lending model. And so if Upstart was able to see even just 1/10 of the numbers of Bank of America's revenue, 1/10 would be around $7 billion in revenue for, a future year. I'm not saying that's going to happen next year, but most likely in the next 5 to 10 years, we could see their revenue hit $7 billion. And if that happens to be the case, well, a stock that's only worth $13 billion and pulling, $241 million in revenue. Next year will be about $700 million. Well, we could already see a future 10x in Upstart stock price. Obviously, this is just pure speculation, but that would put Upstart stock price, obviously before any kind of stock split or anything like that, at around $1,700 per share. Now, obviously, it has a long way to go, and the competition is going to be firing up, especially in that segment. But as competition comes in, the market will also grow with it. So is it entirely possible for Upstart to see this, crazy demand? Of course. And could it actually reach those numbers? Yes. Will it take some time? Obviously it will. But I'm so happy to see the results this quarter because they were so splendid. And it gave me a ton of confidence in not just Upstart, but the entire financial markets as a whole, especially when we're talking about the more innovative stocks.